Life begins with a sudden sound, a change, a sign that something is about to happen. In the market, there are also signs that indicate a shift is coming. Today, we'll explore one of the strongest of these signs, divergence. Then, we'll see how it fits into a simple trading strategy using RSI breakouts from overbought and oversold zones. Finally, we'll analyze real market examples. Stay with us until the end. Let's dive in. Understanding divergence. Divergence occurs when the price of an asset and the RSI indicator move in opposite directions. This indicates weakness in the trend, and it is likely that the trend will reverse. There are two main types of divergence that traders look for: bullish divergence and bearish divergence. Bullish divergence. It occurs when the price is making lower lows, but the RSI is making higher lows. This suggests potential weakness in the downtrend and could indicate a trend reversal to the upside. Note: regular bullish divergence is always observed at the end of a downtrend and should only be searched for during a downtrend, not during an uptrend. Bearish divergence. It occurs when the price is making higher highs, but the RSI is making lower highs. This suggests potential weakness in the uptrend and could indicate a trend reversal to the downside. Note: regular bearish divergence is always observed at the end of an uptrend and should only be searched for during an uptrend, not during a downtrend. Real market examples. This chart shows the euro to US dollar pair on a 15-minute time frame. As we can see, there's a dominant downward trend. At the end of the downtrend, the price created a lower low, but the RSI didn't follow the price movement and made a higher low instead. This indicates a regular bullish divergence. After that, the trend reversed and became bullish. This chart shows Bitcoin on a 1-hour time frame. As we can see, there's a dominant upward trend. At the end of the uptrend, the price created a higher high, but the RSI didn't follow the price movement and made a lower high instead. This indicates a regular bearish divergence. After that, the trend reversed and became bearish. Combining divergences with oversold and overbought zones. Divergence can serve as a helpful tool to confirm signals generated by various strategies we've covered in previous videos. Now, let's explore how to combine it with the overbought and oversold zones in the RSI. First, let's review the overbought and oversold zones. RSI overbought and oversold zones. We've mentioned the overbought and oversold zones in RSI many times in previous videos, so just to briefly remind you, if the RSI is above 70, it's considered the overbought zone, and if it's below 30, it's considered the oversold zone. Now, let's combine both concepts to create the trading signals. But before we continue, if you're enjoying this video so far, make sure to like it now and give me the motivation to create more content. Let's keep going. By signal, long entry. First, RSI moves into the oversold zone, below 30, and the price is in a downtrend. Then bullish divergence forms in the RSI, meaning the price is making lower lows, but RSI is making higher lows. This indicates a weakening downtrend, and a trend reversal to the upside might be coming. Enter a buy position when the RSI exits the oversold zone, crosses above 30, and starts moving upward. Sell signal, short entry. First, RSI moves into the overbought zone, above 70, and the price is in an uptrend. Then, bearish divergence forms in the RSI, meaning the price is making higher highs, but RSI is making lower highs. This suggests a weakening uptrend, and a trend reversal to the downside could be near. Enter the sell position when the RSI exits the overbought zone, moves below 70, and starts heading downwards. A real-world market example. This is the 15-minute Bitcoin chart. As we can see, there is a dominant downtrend. Toward the end of this downtrend, the price formed a lower low, while the RSI formed a higher low, indicating a bullish divergence. Once the RSI broke above the 30 level, a buy signal was triggered. Following this, the price started an upward trend. Alright, that's it for today. Try adding divergence to your strategy and see how it affects your results. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you don't miss future videos. Let me know in the comments how it works for you. Until the next video, happy trading!